Hello, hello, hello. Welcome now, Stock Trades. How's everyone doing today? Mic check 1, 2, 3. All right, check this out, guys. I'm really exhausted. I'm tired. For all the people in the stock terminal, you already know I've been up the whole night working and doing a lot of things. So I wanted to go ahead and make this video. I wasn't planning on it, but this was actually supposed to be sent out yesterday, as you can see, edited 5 hours ago before the CPI print. Again, I want to go ahead and express my frustration with a lot of YouTubers out there, especially they have a lot of subscriber counts, and it just really mind boggles me how these people get so many subscribers and clearly they do not know what they're talking about. But unfortunately, not a lot of people understand the stock market. So these types of folks have a higher probability of sounding like they know what they're talking about. But when someone that's an expert listens to them, they can easily determine they're full of crap. So in terms of the CPI report, if you don't recall, on January 9th, literally today's the 11th, 2 days ago, I said, you can read it right here, important to know that Wall Street thinks it's going to run hot. What's going to run hot? My body? No. Okay, I said here, our Bloomberg terminal analysis, January 11th, is a pivotal date with the release of the CPI. We're expecting 0.3% consensus in regards to core CPI, but it's important to know what Wall Street thinks it's going to run hot. Okay? And it's going to be an aberration. But there's a lot of people out there that are like, oh my God, the CPI report is hot. Oh my God, And again, they like to paddle bear cases because that's what keeps their viewers watching. And that's what keeps their ad revenue going. And that's basically how they want to have their career, an ad revenue generated career. Well, if you watch our channel, we don't care about ad revenue, right? Whatever we get, we redistribute back to the stock terminal, right? But we don't care about that because that's not my career. I'm going to be a physician. I'm going to be a brain surgeon, right? This is not my career. I'm doing this for the love of the community and for the love of retail investors, okay? And for folks that are interested, how the hell did I know 2 days in advance that the CPI report came hot? Well, because I just ate some Chinese food and I got a fortune cookie and it told me, right? No, of course not, right? I looked at the 10-year yield, all right? It was basically the bond market will always tell you the truth. And in this video, we're going to go ahead and do our market analysis, our mega analysis, and we're going to go in and show you what I'm talking about. So technical analysis overview. From a technical analysis perspective, the S&P 500 is approaching the December resistance levels, which are significant structures as seen in the red image here. We unfortunately broke from the highs of going from October to the December, but guess what? We're rebounding. However, there's a resistance line, as you can see right here, which we believe is going to be respected, given that market breadth has been basically cooling down. So we have witnessed the fourth consecutive day of upward movement in both the S&P and the NASDAQ. Again, it may not seem like that now, but again, this video is supposed to be from yesterday, right? What that tells me is, you remember how I told you that the first 5 trading days are important and how that basically sets the stage from a probabilistic analysis that if we do end on a positive note, we have an 85% chance rallying since data from 1950. Well, you know what? Yes, it came back negative, but it was so marginally negative that it may be a nothing burger and we may even rally from that. How you doing? How are you doing? My man. Excuse me there. All right, market breadth analysis. Analyzing, I ate some hot sauce now, so I just realized it's ghost peppers. So analyzing market breadth reveals a decrease in, because I ran out of the other good peppers. Sorry about that, guys. Indicating a high probability that this resistance line will be respected, right? So unfortunately, the market breadth is destabilizing, which means that we may hit this resistance line and falter among it. But guess what? It's okay. It means that we're not in a bubble. This is actually really good. It means that we're going to be going towards potential growth rather than going up really high and then crashing down. So healthcare sector and technology. So if you look at the ETF, specifically XLV, it is approaching a typical resistance level, which is crucial to monitor as it represents the second largest group in the S&P 500. Utilizing our stock terminal and our command, think like TR-SR, LEV levels, XLV weekly, you can see this AI automatically plans you the resistance, and you can see it's been trading along this. And we believe this might be respected. Now, if it passes, okay, that'll be interesting. But we believe at 142 and 83 cent region, we do believe that XLV may encounter some resistance. So in order for us to go to all-time highs, that means the first largest part of the S&P, not the second largest, which is healthcare, will be technology. So a lot of Wall Street folks are looking at, for example, NVIDIA and Meta, which has done really damn well, looking at technology stocks to basically take us up to that all-time high. Now, in terms of small caps and market cycle analysis, the ticker symbol IWM has rebounded from our anticipated support line as predicted in our prior research postings. I'll show you a picture. Okay, so if you go down here, you can see we drew this resistance line and we said it's going to most likely come down to fill in this gap, and hopefully we'll be monitoring this line. And would you look at that? It went ahead and rebounded. Again, pure technical analysis here, okay? Now, market cycle analysis. Or so this suggests that a potential weakness upon reaching all-time highs aligning with our research. So we do believe that once we get to those all-time highs, we do believe we are going to falter, which falls in line with the presidential cycles, where the second half is actually stronger. So the second half of 2024, we believe, is going to be a lot stronger than the first half. And we're going to be continuously reiterating this, as you can see here, for 2024 outlook, okay? And we've had this data, and we see it, that in presidential election cycles, the second half usually supersedes the first half. And this data dates back all the way until 1950. Stock market volatility and momentum. So if you look at the volatility experience of the stock market during its initial 5 trading days, like we said, it was actually negative. However, we have had some positive momentum in the last 4 trading days, indicating that this may be a nothing burger and we might actually hit all-time highs very soon. And that, specifically speaking, the second half of 2024 is where we're going to get a massive bull market, okay? That's just basically from the presidential election cycle analysis that we've done, okay? So market consolidation and economic outlook. So if you go ahead, once we achieve these all-time highs, we expect market consolidation. We're going to get a lot of headlines. That's people speculate about the Federal Reserve cutting interest rates. Many of them are going to say that, you know, there's a correlation between rate cuts and recession. Yes, I get that. Yes, a 5-year-old can see that. But the thing is we have a lower number of times that this happened. So it doesn't mean that this trend is going to continue, like what we saw with this huge rally we got from October 2023 and onwards. And also, honestly, 2022 as well. Economic outlook. While this is a possibility, the probability is relatively low. Less than 20% in a given year, we do believe a recession might happen, right? But we do, from our research, we think that from the McClellan oscillator and our heavy analytical tools, we do believe that these types of news that's going to come out regarding a hard landing is going to prompt retail investors to sell in anticipation of a recession. But we do believe that there's a low probability of that. And I firmly believe that we are going to get a bull market, especially in the second half. So unfortunately, a lot of unadvised retail investors that don't know, nothing about, just Wall Street and just reading CNBC headlines and whatnot, they're going to go in and, they're going to sell. And that's just how it works, right? They're going to sell they just pulled out a $250 billion after a 20% gain in the S&P 500, unheard of, right? So 10-year Treasury and CPI report. So we will monitor the purple line resistance closely as we, the CPI gets released. Well, it already is released and it came back hot. As I said, we do believe, again, I said here, Wall Street is suggesting that we may be bracing ourselves for a hot reading. How the hell did I know that? Because the 10-year was already going up before the CPI print. That's how I was able to know that potentially the CPI is going to get hot. The bond market was spilling the beans. The bond market is actually larger than the stock market, right? So the bond market tells you what's going to happen, and the stock market will obviously follow in conjunction. Again, not many people know this, which is why we have the Mastering Stock Market course to teach these, basic principles that unfortunately folks just don't get, which is, if you understood this, the market already knew this. But then if you go ahead and let's say, for example, go to Yahoo Finance right now, I'm sure they're going to say, CPI comes in hot. In fact, I took a screenshot of it. Let me see. Here it is. December inflation comes in hotter than expected. That's complete bullcrap. That is the most crappest crap I've ever seen. That is just the smelliest crap ever. Because if it's true that it came hotter than expected, then why was the yields rallying? No, guys, it was very clear. We already knew about it. And I believe it's a nothing burger. Okay. And again, the whole thing with the CPI, majority of it is housing and shelter. Okay. We already knew that. Okay. But a lot of folks out there, they're going to basically try to spin it up to get retail investors to listen because they like to make money on ad revenue. We don't like to go ahead and what is it called? Hype. We like to just focus on research. And again, if you like this video, please consider liking it. I'm so freaking tired right now. So I don't know how the hell I'm talking, but we're going to go ahead and go get this through so you guys can have this information so you guys know exactly what's going on. So from our Bloomberg terminal analysis, we do believe inflation will continue to go down. And we do anticipate that even after this hot CPI print, we are going to rally. Okay, we are going to rally. Whenever you're near 1% of new all-time highs, we rally the next 30 days. We do believe we're going to do that. Then we're going to fall back down, and we're going to go to how the presidential election cycles proceed, which means the first half of 2024 is going to be weak, and the second half is going to be strong. Again, I'm repeating it because it's very important. I already talked about the slide regarding the 1% election cycles. We went ahead and went over this, okay? And in terms of the research edge side of things, we do believe we are going to get a price to earnings expansion. We do believe that small caps are set to explode. And here's our small cap analysis. And again, for the CPI report expectation, we already know, guys, we already knew this thing is going to run hot. Okay. It's all in the bond market. Okay. And then that's pretty much it, guys. I mean, it's just repetitive, just trying to let you guys know about the 10-year, the positive momentum, and the presidential election cycle. Presidential election cycles give you positive percent return momentum for the past, since 1950. Okay. And again, the second half is going to be stronger than the first half. Okay. So for me, that first half is going to be great for what I'm doing is I'm buying the dip, right? And again, this is not personal financial advice. I don't know your situation. Also, I'm not a financial advisor, right? So take this as just a grain of salt and just as pure education. Again, if you like our platform and if you like the work that we do, go to alstocktrades.com and look at our products in the link down below and use coupon code New Year's and check out with using Affirm with our amazing partners and use coupon code New Year's for $800 off. We've updated our stock list. And if you like, follow us on Spotify, Apple Podcast, Apple Music, Amazon Music, Google Music, iHeartRadio. We're on everything. Okay. Overall, guys, it's a pleasure. I'm going to go take a quick 30-40 minute nap and I got to go get back to work. But overall, it's a pleasure and honor, folks. I'll see you on the next one.